Assalamu alaikum, and a warm welcome to Oasis Focus on Finance, brought to you in this month of Ramadan. I'm your host, Shafiq Morton. We'd like to thank you for your comments and questions from last week. Please keep them coming. Our SMS details and email address is on screen. Last week we discussed the South African economy, global trends, and the economic climate. This week we take a look at Islamic finance, and our special guest is Ebrahim, Oasis CEO and Chief Investment Officer. Assalamu alaikum, Adam, and welcome.
Wa alaikum salam, Shafiq, and it's always good to be with you.
Adam, how far has Islamic finance gone in the last decade or so? And I think the big question, where is it going?
I think Islamic finance has moved fantastically over the last decade, and I'll talk to about two elements: the actual industry with all its role players, and the investor and the ordinary Muslim. And I think on the industry we've made tremendous progress. The institutional capacity has been in place now for a number of years. So the global regulators like the IFSB and IOFI have set standards and regulations. With standards and regulations, you have harmonious rules, which allows people allows transparency. Transparency builds trust and integrity. And so with that has come global acceptance of product and global role players like asset managers and banks, and not only some of the institutions. So the institutional capacity of Islamic finance has been really enhanced over the last 10 years, last 20 years. And when you have institutional capacity like we have today, you're able to put in product relatively cheaply, relatively easily. And what that does is it makes you increasingly competitive relative to conventional. And by the way, remember, Islamic financial products should be lower risk. And over the long run, it should be better returns. So better returns, lower risk over the long run, because you don't have some of the inherent risks that Western conventional products have. And if you then can be competitive with speed to market and cost competitiveness, then we've actually got an ideal solution. So we've made tremendous progress of the last 10 years. If you look at the second element though, and this is the element that's the consumer, that's the Muslim, that's the investor, and where we are, and based on experience, it looks as if for the first 20 years, you get a situation where you have three batches of people. 40% of the people are just not interested. They don't mind how they invest. In fact, they don't want people to know that they have money because they don't want people to know that they're investing it in the wrong places. So they get exposed to the beers and the alcohols and the casinos and the pork. And that's 40% of the market. And another 40% of the market is ultimately very complacent. You can actually do everything, and they're just too busy to actually make the step and move from conventional to Islamic products. And then the balance is 20% approximately who are committed to kind of walk in the way and actually take action to get their financial affairs and their wealth management and their all other products in the Islamic way and under the Islamic finance umbrella. If you then look at the next 20 years and where the task is to educate, firstly to keep that 20% and grow that 20%. If we can work on the 40% that's complacent and reduce that by half, then we've actually doubled the size of the market that's actually compliant. And so I think it's less today about the institutional capacity of Islamic finance, and it's more about now growing the market in an effective way and getting more of the complacent people to move over into the action, and for them to benefit from these great returns at low risk. So I think that's the next 10 years. It's less about institutional capacity and more focusing on the consumer.
Now, Adam, we see that Islamic finance it has a very stable regulatory base, but who are the major beneficiaries of the growth of Islamic finance?
So there's the consumer, obviously. Ultimately, we're all there to serve the consumer, the investor. So ultimately, the consumer is the major beneficiary because their wealth increases. Society generally is a big beneficiary because there's zakah that's paid, there's sadaqah that is earned, there's a non-permissible income that goes to charity. So that's quite an important element. Within the industry, when you have the standards set, it allows for growth, ease of growth. When we started, we had to change rules and regulations. To get a product launched would take 2.5 years. The cost would be very, very high. Today, to get a product launch, most probably 2 months. You know, very cost effective, very easy to do, and you can do that on a global basis. So the beneficiaries of the industry, so the consumer, society at large, and the industry. So today, it's the Islamic banks, the Islamic funds and asset managers and wealth managers, the takaful companies. You know, you now have every segment of the market covered. So where we are, and then we now have, you know, the Sharia scholars, you have the accountants, they have the lawyers. So it's actually fostering self-sustainability. It's fostering its own growth because it's creating employment. It's lowering the cost of capital. It's increasing the returns to the investor, and it's actually adding value to the economy in a great way, infrastructure. So Islamic finance is a major game changer.
Adam, how does it filter down to the man in the street? How does a person like myself, an average person, benefit economically from Islamic finance?
So there's two elements: your wealth, you know, financial wealth, and then the economic wealth and society's wealth. Okay? Your economic wealth, you now have every element of your wealth, whether it's your banking, your short-term savings, your long-term savings, your retirement savings, your Hajj savings. All of that is now you're able to benefit from by doing it in an Islamic way, and that means that the whole firstly, your wealth is compliant, it's low risk, and it's growing. You know, Islamic products have been growing phenomenally well. Interestingly enough, the volatility is much lower, and the returns are fantastic. Have been fantastic over the long run. And then, you know, all the sukuks and that's going into building dams. It's going to building power stations. Eskom should need a sukuk, and we'll have light. You know, and you know, Sanrail should have a sukuk. It will be more cost effective, and so it's building airports, it's funding airlines, it's doing so much. And the next step, you know, Malaysia has just launched a green sukuk to fund renewable energy. You know, and that's what we should be doing. We've got all these renewable projects, and that creates jobs. All of this creates jobs, it creates infrastructure, it makes it easier for us to get to work, get home. So Islamic finance has really added to everybody, and it's been a game changer. Great economic growth. You know, there's now whole accounting firms and law firms that are really focused on this area. It's creating a lot of jobs.
How has the financial services industry in general adapted to this whole new thing of Islamic finance, which has taken the world by storm?
There are those people who don't want to see it work. So they'll do everything in their power to block it. And in South Africa, you do have those people. Many of the pension fund players actually block the development. And they do it in many ways. They either block the introduction of Islamic pension products to their members, or alternatively, they don't choose a high-quality player. And so, you know, when we get invited to a pension fund with member choice, 60–70% of the employees would choose an Islamic product. If some of the other guys get in, less than 5%. So in that way, they can actually, they can support it by choosing the wrong players, and by choosing the wrong players, they're actually achieving their goals of not growing it. Then the second element of those Johnny-come-lately or the Me Too type of players don't have skills, get into the industry, and they actually do a lot of damage because they don't add value. They bend the rules and things like that. Luckily, there are not too many of those around any longer, but 10 years ago, 5 years ago, there's a lot. But you have to be very careful. And then there's the core industry. And the core industry is really growing. Great cooperation within the Islamic financial markets. So if you talk about Oasis, our global partner, we have relationships with people throughout the Middle East, throughout the UK, throughout Europe, in South Africa. And so there's massive cooperation. People are now focusing on specializing. Before, everybody had to do everything, and everybody believed they had to do everything. Now our focus is wealth management. That's all we want to do. We're not going to go into Islamic banking. We're not going to go into other areas. And so we know we have a competitive advantage in Islamic wealth management. And by us just focusing, we're going to be focusing on our core competency. And when you focus on your core competency, you're increasingly competitive. And investors get really, over time, the consumer gets a very good deal because you're getting great returns, lower risk, lower costs, and that's throughout the value chain. So I think the Islamic finance industry together through cooperation, it's most probably the one area or one of the few areas in the Muslim world where cooperation is actually happening in a big way. And maybe that's the catalyst for cooperation to happen in many, many areas. And cooperation means trust. Trust builds unity. Unity builds an ummah. And so maybe in a strange way, this is part of reuniting the ummah, creating unity, creating the spirit where we do things correctly. And that's really what we need in a big way, because if you look around the world, there's so much division. Just look in the Middle East, around everywhere, there's so much division. And Islamic finance is actually countering that. So alhamdulillah, that's one of the side benefits, and it's quite a material side benefit.
I mean to that. Adam, let's hold your thoughts quickly. We're taking a quick break. We'll be back right after this.